It's the South Carolina Goodlife podcast with your host, SC Realtors CEO, Nick Kremydas.
Welcome to Episode 11 of the South Carolina Realtor Goodlife podcast. My name is Nick Kremydas. I'm your CEO, and I'm going to be your host today. I'm thrilled. We've got two very special guests today. Our topic today, Mike, is insurance, right? We're going to be talking about homeowners insurance specifically, and our guests today are going to help us kind of sort through some of the issues that are taking place in the marketplace today and hopefully be able to give you some information that you can share with your clients as we navigate what I guess we're in the middle of hurricane season, right? So it's always a good idea to be talking about insurance at this time. But knock on wood, where's some wood, Mike? We've had a good year so far. Let's keep it on track. So let me first introduce Frank Shepard, a longtime friend. He is the president of the Independent Insurance Agents and Brokers of South Carolina, a trade association, much like ours, that represents independent insurance agents in our state. Frank has been with the organization for almost 30 years. The Big I, as they've branded their association, is the state's oldest and largest trade association of property and casualty insurance agents. Their mission is to foster an environment and provide resources that sustain their members' success. Their members are small business owners who represent more than one insurance company typically and sell all types of insurance. We're also fortunate to have Russ Dubisky. Russ, welcome. He's the executive director of the South Carolina Insurance Association, a trade association that represents many of the leading property and casualty insurance companies that do business in our state. Based in Columbia, the Insurance Association focuses on improving the state's insurance market by providing information and resources on insurance-related issues. Russ is primarily responsible for overseeing the operations of the association and communicating on behalf of the members on issues relative to property and casualty insurance. Guys and gentlemen, thank you both for joining me today. Welcome. Why don't y'all take a minute and just introduce yourselves real quick?
Well, great. I'm Frank Shepard. As you said, I'm with the Big I of South Carolina, Independent Insurance Agents. One other brand we advertise is Trusted Choice, so you may see that also, Trusted Choice Agents. I have an insurance background. That's kind of how I got started in this gig. I was an insurance agent briefly in my career, but as you pointed out, actually have gone over the 30-year mark, Nick. That's how long it's been. And so I work with a lot of great people, just like you do in the community, agents all through the state, in every community, every jurisdiction, helping clients, and a lot of them work very well with the members of your association too, hand in hand. I'm sure we'll talk about that some.
Well, thank you for being with us today.
Sure.
Russ?
And thank you for having me. And we work very closely with Frank and his association. But as you said, we represent many of the leading property and casualty insurers that are doing business in the state. So most of the ones that you could think of off the top of your head are the folks you see advertising on TV. Collectively, I think we represent close to 70% of the state's insurance market for property and casualty. And while that covers a lot of different lines of business, commercial, auto, I know we're here to talk about primarily home insurance. We have a lot of carriers that offer homeowners insurance in the state too.
That's great. I agree. I really appreciate y'all taking the time to be with us today. So let's jump right in. You know, a few weeks ago, our Realtor leadership team was traveling around the state. We visited all of our local associations. We have 15 local associations in South Carolina, and particularly along the coast. We received a lot of questions regarding what's happening in the homeowner insurance space. The comments were based on stories out of Florida where several companies have either withdrawn from that space or just have gone out of business, for want of a better word. What can you share with our members about what's happening in Florida, and how is that potentially impacting our members in our state?
Unfortunately, we have seen some insolvencies come out of Florida. with companies that are doing business in South Carolina, so that has impacted our state directly. That leads to, by statute, a cancellation of the homeowner's insurance policy, typically within 30 days from the judge ordering the liquidation of that company. So for all of those customers, they have to find new insurance. The silver lining is, I think by and large, for most customers, they have been able to find a replacement policy. In many cases, anecdotally at least, I've heard that the new policy costs a bit more, so it's not welcome news necessarily. But the good news is that they are finding a market, and this is not going into the residual market pool or the secondary markets where folks are truly having an availability issue, which is, at least in my opinion, far more critical a problem for home buyers than just having to come up with additional money to cover the premium. In Florida, we've seen that happen. Thankfully, so far in South Carolina, we haven't seen that. I don't know, Frank, if you heard anything else.
And the other thing I was going to add is, jumping back even 15, 20 years ago, the South Carolina market for property insurance, especially on the coast, was pretty tight back then. We went through some cycles, and it was those Florida companies that started to come into South Carolina to kind of add capacity, relieve some of the pressure. But they were smaller, less experience, and over time that caught up with them. I think that's what's happening. We still rely, Nick, on a lot of Florida companies to write business on the coastline of South Carolina. There's still a lot of healthy markets out there. And I guess my barometer is very easy. We have a state wind pool. We can talk about that in a little bit. That is a market of last resort. If you absolutely cannot find wind coverage, you go to the wind pool. Well, the wind pool has been shrinking in business, and it's still not growing right now. So that tells me that customers and agents are still finding other places to go to place their business. Yes, at a higher rate, as Russ alluded to, prices are going up.
So, we mentioned briefly earlier about being in hurricane season. If a homeowner receives a notice that says they're being dropped, do you know what that window is before because we don't want anyone left without coverage, right, particularly during this season. But what is that time frame that they have to secure a new policy? Do you know?
With a liquidation, so the insolvencies or the bankruptcies, it's typically 30 days, which is not a lot of time, puts a lot of pressure on the insurance agent to find new coverage. If it's a voluntary withdrawal, you typically have at least twice that, right, Frank? 60 days to find it, to find that replacement coverage. And it's not a comforting thing in peak hurricane season where we are right now, but hopefully that does give enough time for the agent to find a replacement policy.
Yeah, and ultimately, whether there's a hurricane bearing down on the state or not, the wind pool will take every customer that is submitted to them. There is a 15-day waiting period to get into the wind pool.
Yeah, and I should probably mention this too. A cancellation is different than a non-renewal. I don't want to get into too much, technical things here, but a non-renewal would mean we're going to keep your policy in place until it comes up to its expiration. Right. That might happen in hurricane season, which again, you do have to find that replacement policy. But in terms of canceling midterm, there are limitations that are statutory in South Carolina for really just a handful of issues that you could actually cancel a policy midterm. And some of them are related to the health of the insurance company. So if they are overexposed, you don't want that policy anyway. You're actually, right. It's one of those things where they're saying we can't keep your policy in force because we don't have the financial backing.
It is a little stressful, though, when we go through an insolvency. We've not had a lot of those in our state. So earlier this summer, we went through a couple of them, and there was some stress to the system. A large block of policies in any one agency's office that have to be turned in 30 days is a daunting task, on top of all your regular business that you're already doing. So fortunately, we think most of the policies that needed to move and the customers that needed service did find coverage in this latest round of insolvencies. But it was early in hurricane season. You're right. In the middle of hurricane season, it could be worse. But I think there's enough flexibility in the system that customers would be able to find coverage and be protected.
So we mentioned the wind pool a couple of times. Can you give our members kind of just a brief explanation of how that works and what that means for them?
So the wind pool is, as Frank mentioned earlier, the market of last resort. So if you cannot find an insurance company to cover your wind and hail along the coast, there's a limited territory in which the wind pool can operate, then the wind pool is your insurance market. And it is backed by the other carriers that are licensed in the state. So if there are losses that exceed, their reinsurance, there's an assessment that goes on the insurance carriers that are doing business in the state. And they, as Frank mentioned, I think it's important to note, they have a limited footprint in the state in terms of how much business they do. And just talked to them earlier this week. They haven't seen a spike in business, which is an indication to us that we do have markets that are still writing voluntary coverage, even with wind in these coastal territories.
A couple other things is there's limits as to how high they will go on coverage. In all cases, you will need an agent to access the wind pool. They do not deal directly with customers. So either your carrier or your agent would have to give you access. And it would take a combination of probably 3 policies to insure. You would have a regular fire policy for all your other coverages, a normal homeowner policy. You would buy wind coverage from the wind pool and flood coverage if you're if you're at risk for flood loss. You would also need that third policy. So, and on top of that, if your value of your house is, I can't remember. I want to say it goes up to $1 million right now in a homeowner coverage. If you're over $1 million, you're going to have to buy excess coverage on top of that. So it's not the most ideal scenario. In fact, every independent agent we work with will only use the wind pool if they have no other choices. It's not going to be your primary choice, but it was totally designed to be a fallback so that every homeowner in South Carolina had a place to buy at least wind coverage. And wind is that's the big exposure on coast that companies are worried about. That's what they have to balance.
So let's stay on this theme of storms and wind, and you mentioned flood. The National Flood Insurance Program is currently part of that continuing resolution that Congress is debating, right? So if funding is approved this week or next, they'll kick the can down. I think it's December 18th is the date they've got that would keep the program alive. And I'm sure y'all know as we do, Congress has been kicking this can down the road now for years. But the FEMA and NFIP last year implemented some changes to the program based on congressional action that is intended to make the system more fair, right? So the closer you are to a flood or water related area, then the higher your premium would be. And we're starting to see some impacts of that resulting in some higher premiums for folks who are closer to water or flood areas. Are you also, though, seeing other properties lowered premiums as a result of the program?
Yeah, absolutely. You're talking about risk rating 2.0. It was delayed for several years. 2 was kicked down the road. It's finally in place. So agents all through the year are changing all of their policies into the new format of risk rating 2.0, and the rules are different. You're right, as your members are probably learning as well. I have had stories where customers have totally left the flood program now because their property, they don't deem it to be in a high-risk area. I will say this, agents recommend flood insurance on every policy in the state. Whether a customer chooses to take that is totally up to them, but we think every house is in a flood zone. Maybe not a high-risk zone, but they're in a flood zone. But we're seeing customers drop coverage if they don't deem like they have to. If their mortgage company doesn't make them buy it, some of them are choosing to lose. And we are seeing some prices come down. I've had a handful where they are in that pool where the risk is going up. I'm not going to get this totally right. I think the maximum it can go up is 18% a year, but it can go up 18% a year, I think, for like 4 or 5 years, right? I think that's the fear. And Nick, I think that's supposed to be a small group of policies anticipated getting that maximum rate at the end. Small group being 5,000 or 6,000 in the state. So that's not that's not an insignificant number, but it's not going to impact the millions that are buying flood.
And I think one of the impacts it's had, the risk rating 2.0, is where some of those properties have seen their prices increase or will continue to see them increase. It's sort of an opportunity, and I think it was by design meant to be an opportunity for private flood insurance carriers to come in and offer a rate that's more competitive than the NFIP's rate. I think we've already seen that just based on the growth that we've seen with certain private flood insurance markets. There's not a ton of them in South Carolina right now, but there's a couple, and we have seen their premium grow. So I think that it's already happened, and as Frank just mentioned, the year-over-year increases that some of these properties are going to see under risk rating 2.0, I think that is going to give more and more opportunity for these carriers to come in and offer coverage there. And I'm just going to say this because we preach this usually around June 1st with the start of hurricane season every year. Flood insurance is important. We also recommend that everybody at least request a quote, even if it's not required, if you don't live in one of those high-risk areas. We just remind you, we see it all the time. Flood is the most common natural disaster in the United States, and often it happens in areas that have never flooded before, or in areas that are not deemed high risk by the current FEMA flood maps.
And for the most part, flood insurance is relatively inexpensive, unless you're on the coast or in those high risk areas. We've been recommending our members that when they're working with buyers who are buying property that are in flood risk, high risk areas, that they try to secure the policy of the previous owner to transfer that policy. Is that still good advice in today's market?
I think for the buyer, yeah, because there's some grandfathering provisions and some predictability in what the price will be. So I think for your agents, that's probably great advice. And again, but I wouldn't stop there, and I would probably call agents, because I do think as these things do escalate over time, if they escalate over time, you might see some more competitive rates from private insurers.
Yeah, I would say it doesn't hurt to take that step, but I would also say, in almost every property transfer, it pays to at least shop it again and see, because you might have now, your status on your particular property may have changed in your benefit. So I think agents are trying to understand and work it the best angle for the consumer, and they'll work with realtors to help figure that part out.
That's great.
So, yeah.
I would be remiss in not reminding our members that there are NFIP issued policies in every single county in our state. This isn't just a coastal issue, and as Frank mentioned, having a statewide mentality that FEMA basically says we're all in a flood zone. It just depends on the level of risk. So it may be certainly something that you want to have a talk with your clients about as you go forward in these property sales, because when a flood event does strike, it can be pretty devastating to the property owner. let's switch gears for a minute, if I can. Market over the last couple of years, what kind of we call, I guess, post-pandemic market has been exploding at the seams in terms of the volume of sales. The valuation of properties has increased tremendously. And one of the questions we got from one of our members a few weeks ago was, should we be telling our clients, our customers, to reevaluate their repair or replacement insurance? We've seen a typical home appreciate in the double digits almost for 3 years straight now. And the insurance policy, I guess, unless it has some type of escalation clause, may not cover those replacement costs. So how are y'all communicating that with your agents and your companies to have that conversation with their homeowners?
Great question. We actually, with agents, have that conversation quite a bit, because there's even some questions about the best way to develop that methodology and come up with that replacement cost number. Remember, in an insurance policy, you want the number to be able to replace the building. And of course, there's market value involved in a house that includes the land. So there is a distinction there. There are a number of tools to measure the replacement cost. It is changing a lot. Almost every insurance company has a built-in inflation protector. Russ can maybe speak more to that. And sometimes consumers don't agree. Maybe sometimes they think the company's increasing it too much. So it can go both directions. But I would be agents have tools built into their computer systems where they can help do replacement cost estimates. I would also, if it's serious enough, maybe even talk to contractors or builders who are actually doing the work and find out what the pricing is. Even if you're doing a rough estimate per square foot of reconstruction cost, I think it's a very valuable exercise to go through, and it is changing a lot. Listen, inflation in society, it affects your market, it affects the insurance market. I mean, none of us are immune to what's happening with inflation, right? It all gets passed on to the insurance guys. So that's one of the reasons prices keep going up.
Yeah, and inflation is real, and it's impacting all aspects of our business and lives.
So. Yeah, I think it's important to, I have the one note that I have on my note card is insure to value, because that's a big topic right now for insurers and also for home buyers, is getting that right number. The market value, as Frank just said, might be different than what the replacement or the insurance value is. Certainly depends where you live, but what my members are focused on is getting the right number for what it takes to repair or rebuild your home completely. Lumber, I think it was sometime last year was up like 300%. I know that's come back down, but I think, if you look back 3 years, we're still up over 50% higher for lumber costs than what it was a couple of years ago. The cost to deliver materials to a job site has obviously increased as well. Labor costs have gone up too. So the cost of rebuilding homes has certainly gone up. So you do need to make sure you have that adequate coverage. Our companies, as Frank mentioned, we use tools. A lot of that's based on the data that we have for rebuilding and replacing homes currently. And that's being used in our systems. I think many of our carriers have sort of required renewed attention to that number when they're pricing the policy, perhaps giving some less flexibility to the insurance agent in that system as to how much flexibility they have. Okay, I think that's too high, I'm going to back it down. So I think that there's an absolute focus, and a lot of folks have seen that coverage amount increase. And going back to what we talked about earlier, also the rate, the price per $1,000 of coverage has also increased. So we're seeing this impact the cost of your insurance, of course, but you're also buying more insurance too. So that's something to keep in mind. The last thing I'll say is on demand surge. If, knock on wood, somewhere here, we have a hurricane that impacts a large amount of homes. It's a catastrophic event, and we're having to rebuild thousands of homes all at the same time. That's going to impact the cost per home to rebuild. A lot of insurance policies have some additional coverage for that already included in the policy, but you want to make sure that your replacement value could cover you, even if, today it could rebuild it, but in the aftermath of a storm, maybe it's not enough. You want to make sure you have the adequate coverage for that too.
And one other thing, Nick, on that, I would say there is often a disagreement with what the consumer thinks the repair and replacement of their house is versus what the insurance company is willing to insure it for. And sometimes the insurance company is not going to agree with the consumer. At that time, the consumers, and you're probably going to need an agent to help navigate that, but a consumer may be faced with the fact, I got to move to another company just because I'm just not willing to insure it as much as this insurance company and insurance company. So be prepared for that, I guess, is what that's not happening a lot, but I do have stories where that's the case, where the company's inflation factor may be higher than what the market is actually experiencing.
Right. Wow. I had not thought about the impact on cost of a wider spread, more catastrophic event. Let's pray that we don't have to deal with that. But it is we're obviously in a, we're a coastal state, and those are things that I know you and your companies and members have to contemplate in your business. So that's a really good point to share. All right, so we have had I think a very interesting conversation today, and I know I've got one takeaway that I'll share with our realtors here in a second. But before we wrap it up, why don't you share your thoughts? We're always looking to the future. What does 2023 hold for the insurance industry, and how could that impact homeowners in South Carolina?
I still think pricing is going to increase for the next 12 months. I think availability of being able to find coverage is hopefully going to level off, but I think it's still going to be a little tighter than it has been, obviously. One good thing, and we didn't talk about this, but our Department of Insurance, who's in the middle of this, okay, they understand from both sides how this is working. They're actively trying to recruit companies into the state too. Now that's a long-term process. That's probably not going to happen in 23. So I think there's going to be still a little bit of short-term capacity issues. Let's just pray that we get through a storm-free year. That would help a lot in South Carolina. But I do think there's going to be, I think customers need to be prepared for paying a little more than they have in the past. I just think those trends are going to continue. And again, a lot of that's tied to our economic inflation in the general economy. Sure. So
I would agree with that. I think, it's what we have called a hard market, where availability is a little bit tighter. There's more of a focus on underwriting from the insurance standpoint, so they're a little bit more selective. They're trying to find, profitable business, and pricing is also a part of that too. I do not see that changing in the next 12 months. I'm with Frank on that. The only thing that I think might impact our business too going forward is, interest rates. Investment income is a huge component of the, profitability picture for insurance companies. And a lot of those are in, more conservative type investments. So T-bills, CDs, things like that. So as those interest rates do climb up, you could maybe ease a little bit of the pressure as insurers are buying those. If they're going to get a higher rate of return on the capital that they have, maybe there's less of that need to make their underwriting profit and could make rates a little bit more competitive. So for the consumer standpoint, I'm a little optimistic that maybe some of those things change going forward.
That's a wonderful outlook. Appreciate y'all sharing. And we'd be remiss, I guess, not to mention retiring Insurance Commissioner Ray Farmer. And thanking him for his service to the state. I know he worked tirelessly to bring new companies and more competitiveness into the state and to help consumers and the businesses alike. So our thanks to retiring commissioner, and look forward to working with whoever the Senate decides to, I guess whoever the governor appoints and the Senate approves in the coming months. So let me wrap up with just a couple of thoughts. Want to thank Russ and Frank for being with us today. And my takeaway is this: we as realtors strive very hard to be the trusted advisor, right? To be the counselor for that seller or buyer in our communities. And what we know, and what I hope you've learned today, is that there are other trusted advisors in your community, like your local insurance agents and insurance companies, that can provide your client the data, the information, the comparisons they need to make informed choices about what is the best insurance product, how to best insure their home, and what better way to show your expertise than by working with a great local insurance agent to make sure your clients' needs are always covered. So, gentlemen, thank you for joining us today. And realtors, be on the lookout for our next podcast of The Good Life. And in the meantime, stay safe, stay strong, and we'll be in touch real soon. Thank you.
For past and future episodes, check out the Good Life podcast at goodlife.screaltors.org. Thanks for tuning in.